Like if you're too dumb in the markets, the only way to revive rural economy is like generate more jobs. I'd say it's peak euphoria. Honestly, I've been in the markets for a few years. I haven't seen this kind of market ever. Like ever. The first trending thing that I think is going to be agriculture, farm machinery. And that went so right. Like it was so good. If you had invested some amount in railway stocks at that time, you'd have made at least 5x from there. Alright, so I'm back with another video. It's been a while since I've made these kind of videos. The last time that I made a stock market update video, that was before the budget. A lot of events happened after that. We have a lot of events to unpack in this video. I'm calling it Business Nerd Stock Market Series. Like I wanted to do a lot of so if you guys don't know, I also host a Business Nerd podcast where I invite guests and then they share stories. I also wanted to do a solo podcast of my own, talk about how I'm trying to navigate in the stock market. So I'm doing it in a series form. So let me know if you guys like this kind of series. I was thinking of doing a separate stock market video, but I thought let's just incorporate it in this podcast that I'm doing. So that's what I'm trying to do. I'll share a few updates in the stock market. I'll cover what I'll talk about what I covered in the last video and then share a few updates of what I'm doing. It's July and we have a lot of events to unpack. If you're from the stock markets, trust me, this series is going to be for you because I'll share what I'm doing first of all. I'm not going to talk just about a trending stock or a trending sector and then not talk about what's the reason behind it because that's what everyone does. I wanted to do this series because I can go deeper. I want to do a proper video where I also talk about the reasoning behind those sectors, like why I think that's good. So that's the intent that I'm doing in this series and like I hope you guys like it. If you like it, please leave a comment and I'll make more of these videos. So for other business nerd podcast viewers, like if you're not from the stock markets, you can probably skip this one. So yeah, I'll try to keep it balanced so everyone understands these concepts. Now, we had an announcement from SEBI about finfluencers, like great initiative. I've seen a lot of people sharing reels of a new stock, something that's trending, something that people are recommending. All these PSU companies, when the market goes up, everyone talks about stocks. Everyone just makes videos on individual stocks that will go up. But I think we'll see a healthy correction because this is extreme euphoria. We haven't seen this kind of market ever. And this is a good move by SEBI. First of all, I appreciate what they're doing, trying to help retail investors stay away from these cash grab schemes. I don't consider myself to be a finfluencer. I just talk about things that I like. I share my reasoning. I also don't mention individual stocks every time. Whenever I've mentioned the stock's name, I've also provided enough value that says that this is what I like about this stock and there has to be a reason behind it. There's no investment advice. I don't talk about 100 stocks. I only talk about 5 or 6 that I like personally. That's the difference between other people and me. So let's just get right into it in the stock market. What's the current trend? What's the current update? What's the current market like? I'd say it's peak euphoria. Like I've been in the markets for a few years, a decade. I haven't seen this kind of market ever, like ever. And a lot of people who entered the markets after COVID, they haven't experienced a serious crash. We'll have one wave that will wash them out. I'll talk about the reasons why I think that's going to happen. That's going to be in the later part of the video, but that's just the broader trend of the market. Do I think that there are sectors, some stocks that are undervalued? Yes, absolutely. There are a lot of sectors that are undervalued. You can look at it from a long-term perspective. I'll mention it in the video. To give you a reason why I think there is this peak euphoria is because first of all, like broader markets, like you can check the data. So Nifty made a new lifetime high today. It's 24,587. And if you look at the PE ratio, it is 23, something like that. And the earnings of individual stocks within Nifty, it hasn't grown as much as Nifty has grown. I think there has to be some correction to readjust, to make room for new upsides. We also might just need one reason to correct. And that could be in any form, like a war, some political tension. It can be anything. We also had a commentary from Jerome Powell, US Fed. He mentioned that the stock market is not factoring in that US is running on a very tight budget. Like they're going in debt by $1 trillion every 90 or 100 days, I think. A lot of major institutions, people running those institutions, they warned about market crash because we get carried away in peak euphoria that we don't realize what's happening, what is the reason behind these things, because everything seems rosy. So we should be careful when such commentaries are like heard of in the market, it's time to take a step back. I think that's what I think for long-term investors. It's time to take a step back and just analyze how things are going, analyze how you want to move forward in this market. Let me just give you an example of why I think the stock market is overvalued. So if you look at Nifty 50 P ratio valuation, so right now we're sitting at 23.332, right? And if you look at expansion of Nifty, like you can see from June 2022, that's August 2022, it has risen consistently. We saw some downturns in like May of 2023, March 2023, and then from there it started rising. We're in a one-way rally after that. We saw some minor dips of 2-3%, 3-4%, but then sustained. It has consistently risen. And when you look at P ratios, you can look at from 2022, more or less been in the same range. When you look in, if you pick individual stocks within those Nifty, like those are extremely high. Stock markets factor in future earnings. Like when you look at global markets, USA is doing really well at this point, but they have an election year. Who knows what's going to happen in the elections? Might see some sort of correction in Nifty because of that. And if you look at 2016 when Donald Trump came in, like Nifty was correcting at that time. So there was a 900-point crash. Now we have a big event coming up, which is the budget. It's on July 23rd. The budget won't be any different than what we saw in February. It's not that the government's focus has shifted. We may see some trending sectors that I'll mention in some time, but overall, I think the focus remains the same for the government. They'll stick to solar, they'll stick to housing, a lot of these sectors that were announced in February. If you haven't watched that video, I made a video recently on those sectors before the budget. So the first trending sector, like if you're a trader, the first trending thing that I think is going to be agriculture and like machinery, farm machinery. That will do really well because recently the agriculture stocks have started rising. If you just Google agriculture stocks, you'll come up with list of companies and then go by filtering it through like high sales growth, high operating margins, high ROC, low P. You'll come across a handful of stocks that have not delivered returns in the last few years. They are likely to deliver in the coming few quarters at least. One more thing that I'd like to mention, December of 2022, when railways, when PSUs were not talked about, the government was talking about reviving the railway industry. Like if you look back on those articles, government was actively pushing railways, and it wasn't just in 2023 that the railway stocks started going up. It was in 2022, Q2, Q3 2022, the stocks started rising. In December of 2022, I noticed that something's shifting because railways have historically not made any money for investors, but it seems like in the last 2 quarters, they've made good amount of money. And then the government was announcing of bringing in fresh investments, bringing in more capex. So all those news were there. So I noticed some pattern within that sector. So I said, this is time we look at railway sector seriously and then maybe consider making fresh investments. And that went so right. Like it was so good. If you had invested some amount in railway stocks at that time, you'd have made at least 5x from there. So that's the kind of push we are going to have in these two sectors. That's just my wild guess. Like I can be wrong, but that's just my wild guess because the government is actively pushing this sector. Again, depends on the execution by the government. On defense, like defense stocks have made lifetime highs. Like I think there will be some cooling off because the numbers are way ahead. That's just my understanding of defense. If there is some sort of war or something like that, defense stocks will shoot up temporarily. But we'll have some cooling off in defense because I don't see any sort of room for defense stocks at least in the next 1 or 2 quarters. Again, if the government announces major capex in defense stocks, again, they'll continue to rise. Now, when it comes to defense, there are other sectors within defense, that shipbuilding, that are still cheap. 1 or 2 companies are still cheap within that sector that may rise. Again, it's a broader theme that I'm talking about. I'm not talking about individual sub-niches under a broader theme. So broader defense, I think it is overvalued at this point. Railways. Now, on railways, again, it is too high. I don't know what's going to happen because the budget says that they're going to make fresh investments in railway sectors. But if you look at just numbers of these companies, it is still good. All these good PSU companies, it is growing exponentially, like in double digits. Infrastructure wise, railways are going to grow massively, at least for the next 5, 6, 10 years. That's too far ahead, but at least for the next 2 years, it's going to grow phenomenally well. So if you've already invested in railways, like stick to it. I would want to look at railways as a long-term theme. And we're going to see fresh investments if it continues at this pace. But for new investors, I'd say wait for some cooling off period. Not just railways, like everything is expensive. Like pick one sector and tell me that's undervalued. There's one sector that's undervalued right now, which is generating massive profits, which is OMCs. Stocks trading under 10p and those generating massive free cash flows, having healthy dividend yield. So I think from a defensive stock perspective, OMCs are really good at this point. What about three sectors that I said that I like? So the first one is OMCs. Like I love OMCs trading at single digit PE valuation. The corporate governance issue is long behind us. The government is actively turning these PSUs and like making them profitable for investors as well. That's one sector that I love. OMCs. The second is ER&D, engineering R&D sector. Government is actively pushing manufacturing industries, and behind that there is derived industry, which is engineering R&D services. Globally, engineering R&D is doing phenomenally well at this point. We're seeing massive transformation in the EV space, and that's going to attract a lot of investors. There will be a lot of capex from companies investing in research of those new technologies that happen. And the last one is FMCG. Like if you're too dumb in the markets, the only way to revive rural economy is like generate more jobs. And when the government generates more jobs, sectors like FMCG grow really well. That's just an accepted market phenomenon. If the government wants to revive rural economy, FMCG sector is kind of a proxy investment to it. A lot of FMCG companies have grown in the last, I'd say, in the last 1 or 2 quarters. So I'd really go all in on FMCG. Like if you had to pick 2 out of 3 sectors that I mentioned, I'd go with OMCs and FMCG. And the last one that I shared, like in terms of if you're a trader and you're a momentum investor, a swing trader, look at agriculture and farm machinery stocks and housing, because these 3 kind of sectors that are interconnected with the government's focus of reviving rural economy, farmers, agriculture, those are connected. A lot of them are interconnected, and you'll find a lot of, when you just explore in that area, like you'll find a lot of good companies. So that's it from this video. I hope you guys like this. If you guys love this kind of in-depth, balanced view, not too complex, not too technical, something in the middle where people can understand who are not too experienced in the market, leave a comment. Let me know what you think of this new series that I started, which is Business Nerd Podcast Stock Market Series. And leave a comment. Let me know what you're looking at in the current market condition. Like if you have made any sort of fresh investments, I'd be happy to know. So it's not just a one-way communication. I'm kind of keeping it an open dialogue. So I hope you guys like this one. Until next time, peace.